Welcome to High Growth Matters, a podcast that explores topics on the minds of forward-thinking HR leaders and people managers, from leadership and strategy to emerging technologies. High Growth Matters is sponsored by OpenComp, makers of the world's first compensation software that gives you clarity every time you make a decision about pay. And it's hosted by me, Caitlin Allen, a startup executive with 3 exits under my belt, along with my co-host, Nancy Connery. Nancy was founding VP of HR and employee number 5 at Salesforce, and she now leads one of the most reputable HR advisory firms in Silicon Valley. She's also co-founder of OpenComp. Don't forget to give the show a 5-star rating as we dive in. So state and federal governments, employees, and arguably our own gut instincts all tell us that paying people consistently and fairly is good for business if we do it in a scalable way. But is it? In this episode, we explore the relationship between how companies pay their people and how well they grow with Ryan Denny, who is currently the head of research at Friends and Family Capital. And Friends and Family Capital has invested in companies like Facebook and Gusto and Robinhood, among others. Before that, Ryan led compensation at Palantir for almost a decade, and he served in related roles at companies like Google and Nutanix. Ryan, thank you so much for being here.
It's a pleasure. Thanks for having me.
Ryan, yes, thank you for joining us today. We are looking forward to a conversation with a true expert here. And can you tell us a little more about your background? Caitlin, you did a great job there, but, Ryan, fill us in on a little bit more of the details.
Absolutely. I'm sure you probably hear this a lot from people you speak to, that I fell into compensation completely by accident. It's not something I, studied in school, wasn't my first job out of college. Coming into Palantir, I was actually hired in to head their FP&A function. So one of their first finance team hires. Did that for a little bit. And then the CEO approached my boss, the CFO, saying, hey, we need somebody you can trust to handle really sensitive information around salary, bonuses, equity. This is not information we can have floating around in the open. Who can you trust to run analytics and really set up our compensation structure? So I was volunteered for the job, and I figured it was an interesting project to get into. And lo and behold, several years later, I was still happily doing it. So I've sort of found a passion for compensation. I find it's something that's really, really important to people. Really gets into their bones, and in many ways defines how they feel that their company and their peers value them. So I've just really enjoyed all the years of learning about how people view compensation, all the different structures you can set up. And now I'm enjoying helping advise other of our portfolio companies on setting out on their journey to grow into established companies.
I love the phrase, how compensation gets in people's bones. It's a good visual and very accurate. Maybe taking a step back from your very impressive career for one quick second, Ryan, we love to ask the question at the beginning of the episode to get to know you a little bit personally. What's something that most of your coworkers don't know about you?
I'm a bit of a movie buff and have been since college. A fun fact about me is there's this ranking on imdb.com called the top 250 films by user rankings, and there was a point in time where I'd seen every one of the 250. I think I try to keep it up to date and run searches for ones that I haven't seen before. So I think I'm maybe only behind by 1 or 2 right now. But that's my little fun fact, is that over quite a number of years, I managed to rack up all 250 films under my belt.
Do you watch the whole film even if you don't like the film?
Oh, absolutely. Yeah, no, that's part of the ordeal is, I'm trying to sample all different languages and cultures, because it's not just US based, it's not English based. I think you learn a lot more about the industry and about what good storytelling is. So I just trust the user votes to tell me what high quality is. That's not the only movies I watch. I watch a lot of kids movies now. I have a 4 and a 7-year-old, so I'm well versed in, Toy Story and Frozen and all that as well. But a little bit of both.
Multifaceted on the movie front as well as compensation. So you first learned about, the relationship, between how a company pays and how fast it grows when you were at Palantir, with some, amazing groundbreaking growth. How do companies tend to make this relationship more difficult for themselves than it has to be, kind of, balancing the two aspects?
I think a lot of early companies in their growth have this sense that by inserting structure into their compensation programs, that they're going to give potential recruits that are builders that are looking to create something a sense that they're overly corporate. And so they'll avoid putting structure in place, things like job levels and salary bands and performance reviews and rubrics. I think they create the unforced error of assuming that a potential engineer hire would stick up their nose at something like that and prefer to work somewhere with less structure. And the reason I say unforced error is that if you think about as a company grows and you say you hire a larger engineering team, they're implicitly going to be accepting more structure in other areas, like requiring you to check in your code and have someone review it, and to avoid introducing bugs into your software and looking bad for your customers. So if they're willing to accept more structure in that regard, why would they not accept it in compensation to ensure that they're paid fairly and commensurate with what they're doing in their role? So I think a lot of companies need to revisit the assumption that structure equals corporate and that corporate equals unattractive to potential hires. I think especially underrepresented minorities and females that are very keenly aware that there's bias in the system actually will view it as a positive that you have a strong structure in place and robust ways of ensuring that you're paid fairly for what you're doing and have a clear track to how to get to the next level. So I actually think that you can do a lot of favors for yourself in diverse recruiting by putting structure in place before you think it's necessary.
I love kind of debunking the commonly held myth there that you just did. So thank you for that. When you say that companies need to put structure or a pay structure in place, Ryan, before often they think they need to, and then you just talked about some of the benefits, what does that structure look like? Like for those of our listeners who might not know what that means, what is it?
In my eyes, it's not as simple as just saying, okay, we're going to have different job levels and hire people into those levels and make sure everybody on the team has a level. If you have job levels in place, each of those has to be paired with a clear description of what that level is. I like to think of it in terms of maybe a simple rubric where, if somebody comes to you saying that they don't think they're paid fairly for their role, you can pop out the rubric for their role and have a very high fidelity discussion around what is it that you perceive your report to be doing day to day in their job, and how does that compare with the rubric? And what do you think they need to be doing to advance to that next level, or maybe even get to a higher part of the range of that current level? The conversation should always be around what are you doing and how does that compare with expectations, so that you can have the discussion centered around where the person needs to improve. And if there is a disagreement, you can discuss about that. And furthermore, if you have that type of structure in place, it's possible for a manager to have an eye-opening experience where they go, oh, I didn't realize you were doing all these things, maybe after hours or doing special projects that I wasn't aware of. I've now sort of had to rethink my positioning on your value out of the company. And now I think I want to advocate for you to be promoted. So it allows people to come in with an open mind and actually rethink the value out of a person at the company and how they compare to their role, that maybe they weren't quite on top of the person's day-to-day work as they thought they were. But it can always have a clear rubric to center that discussion against.
Some great advice, additionally, in your experience, what do high fidelity compensation conversations look like? And, can you kind of elaborate on that term as well for some of our listeners?
Yeah, I mean, I feel like if you're a manager having a conversation with an employee who's maybe doesn't feel like they're quite being paid fairly, either relative to others on the team or within the range that they know that the role pays, or even thinking, I'm a level 2 and I think I should be level 3. If you don't have a clear explanation of what you think they're doing and how that compares to a rubric, then you're already on your back foot. If you're having really qualitative discussions or based on assumptions around what you think maybe the role should be, but there's nothing in writing, and so it was never clear to the employee in the first place, you've kind of lost. And honestly, you've probably opened yourself up to, if the person wanted to litigate, you don't really have a lot of defense to explain why you thought they were paid fairly, to take it to a logical extreme. So the more that you have in writing in place of this is what we deem a level 2 to be, and here's the range of what we pay, and you're paid in, say, 68th percentile range, and over the next 6 months, I think that if you do X, Y, Z, you will have proven that you're ready to move up to level 3. that's a great place for a conversation to be, where it's clear to the employee what they need to be doing in the next several months to show that they deserve to move up to that next level. I don't think that means that you have to have levels and rubrics for every last position at your company. If you have unique snowflake roles that are special project based and there's only ever going to be one or two of them at the company, you don't necessarily have to go overboard spending all this time mapping all that out, as long as it's clear at the outset that this person's role is sort of falls outside of our structure and we'll have our own special way that you advance. But for your roles where you're going to have 10, 12 people in a position, or you're hiring several people a year into it, if you get to the point where you have 50, 100 people in one type of function and you don't have any levels, imagine the pain of now trying to rip the Band-Aid off and put that into place and have to tell someone who's been at your company for 5, 6, 7 years, hey, I think you're a level 3 and that person down the hall is a 4. And you probably have pretty serious sense of where you think everybody falls. And now you have this huge disagreement and a lot of politics. If you hire 80, 90% of that 50-person team in and levels are all they've known, then they have no bone to pick because they that's all they knew coming into your company.
Absolutely. Setting the foundation early.
Very much so. And the clarity of communication there is, or high fidelity, to use the phrase from earlier, is really on point. The other thing too, Ryan, that I believe is a very powerful, important message of what you're saying in today's market, and in particular, especially in a remote or a hybrid environment, the way that employees experience the company culture, the company values, really a lot is based in their interactions with their manager. And, to the point of this last question, most of the time when they have questions about pay, they're going to go to their manager. And it's not always an area of specialty for many people managers to talk about, whether it's leveling or whether it's pay bands, things along those lines. And so equipping our managers today, I think, is at an all-time high, given the importance of pay in today's marketplace, whether it's governments, investors, media, employees, whatever. And then you add on top of that just the additional kind of the newness of how we're all interacting in a remote environment. I think it complicates that.
Absolutely. And I also think that, if you're somebody who's charged with making decisions about compensation for a given person at the company, given the fact that you need to know how their work compares to what you expect for that role, that means you implicitly either have to know or be maybe 1 degree of separation away from knowing what that person is doing, and try to avoid as many of those aha moments of, I didn't realize you were doing all that. I'm sorry. I've been out of the touch. And now I need to go advocate for you. In many cases, maybe you'll find that you as a manager have too many direct reports. If you have 15 to 20 people reporting directly into you, it's actually going to be pretty difficult to have a really good sense of what every last person is doing and how they stack up against their promotion track or where they should be paid within their band. It may cause some soul searching and saying, do I need to maybe split this team in half and then find a delegate in my team that's going to take maybe the lesser half of experienced people, and I'll take the more experienced people, just so we each have 7 to 10 reports that we can keep a closer eye on. People need to be wary of not trying to amass too many direct reports and then not having any idea what they're doing. You're just setting yourself up for disappointment down the road.
It's almost as if the pay structure facilitates data-driven decisions in that setting or situation that you just described.
Absolutely, yes.
So you recently transitioned into the VC world and you're serving late stage and public organizations, Ryan. For those in the audience that maybe don't know the inner workings of venture capital, what it means to be an employee at one of those firms, would you mind telling us just a little bit of what your day-to-day looks like in terms of how you work with friends and family capital's portfolio companies to think about things like their compensation strategies and improving their pay policies?
Absolutely, yeah. So from the context of working with our companies, I think just at the outset, I'll point out that we're a smaller firm at the moment, which doesn't have enough assets under management to be leading rounds, right? We're not setting a price. We're going to be following somebody else into a round. And so in order to get companies interested in taking our money, because a dollar is a dollar, we like to show that we can actually add some value as that company grows and help them think about the best way to scale their finance function, their HR function, or their compensation structure. So we sort of draw on the diverse backgrounds of the 5 people at our company to be able to help companies that are growing from maybe Series C or D into a public company to what missteps should we avoid and how should we think about setting things up. So me personally, I do draw on some of my experience in compensation and finance to try to advise our portfolio companies and point that ship in the right direction early so that you don't have a lot of pain trying to fix problems that arise maybe a year or 3 down the road.
And what are some of the most common questions that you do get from the Portco companies that you work so closely with?
Yeah, a couple of big ones. One that's pretty common is just, hey, we're a Series B, Series C company, and we're starting to hire a few more engineers, maybe in different countries or in different levels of experience. We don't really have any good idea of what to pay them. How much should we give them in terms of our equity grant? And what's a fair salary to give them, given our limited ability to pay cash right now? Leveraging a resource like Radford is great if you're an established company with well built out, hundreds of employees. If you're an earlier stage company, that's not really Radford's focus. And for a long time, there's been kind of a dearth of data around there to help companies believe that they're making data-driven decisions on their first several hires in a given function, which is a great thing that I've seen OpenComp start to do, is really start to gather data on earlier stage companies and slice by things like dollars of funding raised or what round you're on. And then you can actually have an apples to apples comparison on a cohort that's really been underserved by the data marketplace and compensation. So yeah, recently we've had a number of different people have random inquiries about this, and I've been able to leverage OpenComp to help them make good decisions. Another question that's popped up, completely different, is, hey, we're a cash-strapped startup. Obviously, equity is a large part of our offering, but we have some members of our sales team that, for whatever reason, maybe just the stage of life that they're in, they just have high enough cash needs that, illiquid stock options just aren't going to pay the bills. How do we retain these people? And it's true, like a lot of earlier stage companies they only have a certain number of months of cash on the bank account before they have to go fundraise again. And they'd ideally not like to expedite that by having to pay a whole bunch of cash today to their employees that need it. So I've started trying to help companies think of creative ways to figure that out, so their experienced and really valued account executives don't start departing for more mature companies with higher cash salaries for the heartbreaking reason that even though they love the mission, they have bills to pay. So that's been a challenging one. I don't have any magic silver bullet. I wish I did share, but that's always a fun one to work through with individual companies.
If you figure out that silver bullet, let us know.
I do think there are sometimes situations in which there's things that are disproportionately valued by the employee and less so or less expensive to provide for the company. And it's always different for any given situation. But I do think there need to be conversations had with employees that try to explore the different areas in which maybe you can take some cash flow burden off of the employee while it's not dollar for dollar costing the same amount for the company. But I will point out that this needs to be done in a pretty transparent manner. We don't want these to be closed door, wink and nod agreements where now there's all these rumors floating around that, hey, so-and-so was able to get a big suite setup by saying that they have 3 kids and a mortgage to pay. And all the poor 20-something-year-old singles are left holding the bag because they don't have and they may be adding more value. So if you're going to set up any sort of agreement with a person who's saying they have high cash needs, it needs to be tit for tat and very clearly defensible to the rest of your organization. That, we agreed that they would turn in some of their stock options and they won't see as big of a benefit if we blow up because they needed the more cash today. But we thought that was a fair trade. It needs to be something that if it shows up on a blog post the next day, that it's not going to sink company morale. So be very careful around if you're trying to treat those situations and retain people with cash needs, that it doesn't come across as treating a squeaky wheel to the detriment of other hardworking employees that just don't have those same cash needs today.
Yep, a lot of nuances there. And it's actually a great segue into my next question, Ryan, which is, what do pay equity and pay transparency mean to you personally, given your deep experience in this area?
Yeah, I mean, I think if you think about that rubric situation where any given role and level combination has a very specific description of, amount of responsibility you're taking on, amount of supervision you require. Sometimes it's even more metric driven. Um, you should be able to look at any given individual and score them against that rubric and feel pretty good about the output you're seeing as far as their compensation. There's many different ways you can visualize where maybe you boil it down as you can come up with to say, okay, for all the people that are, say, engineering level 3, and there's 20 of them at our company, and I were to rank them in terms of whatever performance rating we gave them in their most recent review, you better hope that that pretty closely correlates to the rankings in terms of compensation. And if you do have any big outliers, you have very clear explanations of why. Hopefully what you don't see is it's just a random smattering of what compensation comes out when you've ordered them in terms of what you truly believe their value is within that role. And that's where you can hopefully avoid seeing bias come into the system where like all your females are below the median, your males are above, even though if you rank them by performance rating, it's nothing of the sort. And if it is all your males are higher on the performance and the females are lower, you probably have other questions to ask yourself. Are you creating a conducive environment to the females adding same value as the males? Because just because you have ratings aligning well with cash compensation doesn't necessarily mean that you're doing everything. So you probably want to make sure there's equal representation in both performance and in compensation from top to bottom.
Great advice there. As it relates to transparency, which is, all over compensation these days, and, obviously consistent with your advice, it's no secret that we're in very interesting times in terms of, our industry and compensation and how it all ties together and spend. And, I could go on and on and on. And, what trends are you seeing right now during these interesting times? And from that, what predictions do you have specifically around the future and evolution of pay and compensation?
I'm starting to see a lot more activity at the state legislative level as far as mandating certain things. I think that's going to continue. I think it's pretty hard for the federal government right now to come in and just blanket say, here's how the whole country needs to behave from a level of pay transparency or requiring offerings of 401k plans or whatever it might be. But you are seeing the dominoes start to fall as far as you'll see 1 or 2 or 3 states be early adopters of something. And then the next year, several other states start to follow suit. And then it almost seems like there starts to be this escape velocity where at a certain point, state legislators look like they're not serving their constituents very well if they're continuing to hold out when 30, 35, now 40 states have gotten onto the bandwagon for something like pay band requirements. My forecast is that maybe in 5 years from now, the majority of U.S. states, if not the country as a whole, has mandated job postings must have a fairly tight salary range posted along with it. Could be wrong, but we've already seen quite a number of states adopt this. And I'm personally a fan of that. I mean, if you think about our country's military, the people charged with keeping us safe, there's a very clear system of ranks, and those ranks correspond to pay ranges. So if you're in the military, and you can just look at somebody's stripes and know exactly what rank they are, even a civilian like myself could do so. You can, in the back of your head, have a rough idea of what they're getting paid. And I'd like to believe that doesn't put our country at any sort of risk of having a poor serving military just because they're all bickering about who's getting paid what. I think military is an excellent organization doing a good job, and yet they have complete pay transparency. So if it's good enough for the military, for the police, for our teachers, why should it be not good enough for a fast growth tech company?
One of the things that you said there that I think is a very important point to put a fine point on is the concept of fairly tight pay bands. I won't mention the company, but I saw several job postings the other day that had a range from 90 to 900. Let me redo that. From 90 to 900,000 for one job.
Yeah,
and so I think
cheap.
that really is a good point.
Yeah, no, exactly. I mean, if you're looking at a job and wanting to make sure that when you get your offer that's you're being paid fairly. A 90 to 900. I think it's at the letter of the law. Maybe they were just thumbing their nose at the law and saying, okay, we have a salary band.
Sure.
So maybe it's going to become incumbent upon legislators to see the trends and then have to rewrite that legislation to get a little more specific. I don't think you're doing anybody any favors by setting a 10x wide salary range.
Yeah, I tend to agree. Rounding us out, Ryan, what's a commonly held belief, be it an HR compensation, that you strongly disagree with?
I think it's when you look at a lot of different HR and people organizations, I think there's a lot of folks who think that it's unimportant to have any sort of analytical or technical skill set. And I think that's a shame. I think that if people devote some resources and time to learning a little bit of data analytics skills, whether it be just simply in Excel or learning something like Python or SQL, there's a wealth of data at most HR professionals' fingertips, whether it be performance rating data, compensation data, really all sorts of things that any individual, whether it's an HR business partner or recruiter that wants to roll up their sleeves and start crunching some numbers and identifying interesting trends. There's so many interesting decisions you can make, and maybe concerns you can identify if you know how to slice data and what to look for. I think that and it's not actually as scary as a lot of people think to learn how to analyze data. There's so many different courses online, like on Udemy and Udacity and LinkedIn Learning, that for not very much money, and oftentimes your company will cover it, you devote maybe a couple hours a week, and over the course of 6 months, you actually can gain quite a bit of skills. And then really start adding some serious value to your team as you start finding interesting patterns in data that had previously been overlooked.
Importance of data. It's front and center.
Yeah.
You have given so much good advice today. Our listeners are very lucky, and we are very lucky as well to be the beneficiaries of your great advice. What's one thing that you want us all really to take away from this conversation?
When you think about compensation as a general matter, I think it's so easy to get bogged down in numbers and percentiles and rankings. At the end of the day, try to remember to take a step back and remember you're paying human beings, and it's important to be gracious and grateful and kind to people. And when you're having conversations about where somebody's being paid or where you have them in their pay range or when they're going to be promoted, this is very important information to them, and it's going to determine how they're able to provide for their families, how they view themselves as their status relative to others in the organization. So you really want to be delivering this information in as kind and warm a manner as possible, and really deliver it to them in the way that you would want it delivered to you. I think a lot of people can just get really caught up in the numbers and the rubric and forget you've got a fellow human being sitting in front of you. So be nice.
Well, I feel like we've come full circle in some ways. You just explained why people feel compensation in their bones really effectively. So thank you for ending us where we started in a good way. To our audience, don't forget to give us a 5-star rating, and you can email me at podcast@opencomp.com if you have ideas for topics or guests. Thank you for tuning in for this amazing conversation. And Ryan, thank you for making it an amazing conversation.
My pleasure. Thanks again for having me.
Thank you, Ryan.
Win top talent while strengthening runway with OpenComp. Thousands of the world's fastest growing companies use our compensation intelligence platform because it offers the most competitive benchmarks and insights available. To learn more, visit app.opencomp.com/signup.